Alright, hello and welcome to Camel Finance. I'm your boy Camel and here is your weekend analysis video. So starting off with a little bit of Bitcoin news. The UK has rejected pressure to regulate Bitcoin and crypto as gambling rather than a financial service. So the plus side of this is that they probably are taking Bitcoin and crypto more seriously. They probably are going to try to treat this as a genuine financial asset. And the drawback of this is that if they had regulated it as gambling rather than a true financial service, we would have probably had a bunch of ways to legally not pay tax on our Bitcoin and crypto gains. So am I a little bit disappointed with this? Yes, but overall this is probably a positive for the industry. In addition, the UK Treasury has said that it's going to work with Bitcoin and crypto firms to ensure a clear path to regulatory approval. So I would think that likely the UK has been sat back patiently and quietly observing the mess that has been occurring with the SEC in the USA. And they've probably used that as a template for how not to treat Bitcoin and cryptocurrency. So having sat back and observed how not to do it, they probably have a much better idea of what would work and what would not work. So I expect to see good news out of the UK regulatory front in the not too distant future. The US government has sold another 8,200 Bitcoin connected to the Silk Road. And a lot of people are using this as FUD. A lot of people are saying, oh, the US government's got a bunch of Bitcoin, it's going to dump them on the market. But for context, they still hold over 190,000 Bitcoin. So I don't think that's a big concern. And remember, a high volume day for Bitcoin would be in the neighborhood of 400 to 450,000 Bitcoins worth of volume traded. So 8,200 Bitcoin, yeah, that doesn't really matter, I don't think. This is the piece of news I'm most excited to present to you today. The total Bitcoin supply held by long-term holders is now at an all-time high, and that total equates to 14.5 million Bitcoin. So 14.5 million Bitcoin are locked up by long-term holders, people that understand what they hold, people that have no intention of selling anytime soon, or certainly not at these price levels. Now, the reason I'm so excited about this number is if we add a few coins to this, right? So we've got 14.5 million here. If we add 2 million coins that are yet to be mined and will not be mined until the year 2140, they're going to be mined between now and the year 2140. That puts us at 16.5 million Bitcoin. And then there's roughly 2 million coins that we can add on top of that, which brings the total to 18.5 million Bitcoin, of course, which accounts for the approximately 2 million coins that are held by exchanges. Why is that so important? Why is that so significant? Because that is the entire supply. And I know what you might be thinking, yeah, but isn't there 21 million coins? No, because you have to take away 3 million that are lost forever. You have to take away 1 million that Satoshi mined in the early days and is likely never going to move. They're likely just completely burnt from the supply. So there's just simply not enough Bitcoin to go around. Like I said, those 2 million coins that are going to be mined, they're going to be mined between now and the year 2140. So that leaves just about 2 million coins that are held by exchanges for people to buy, trade, accumulate. And this is why, because quite often people reach out to me and they say, oh, I know you said $1 million Bitcoin by this time. I know you showed a metric that suggests we're going to be significantly higher over the next few years. But people often ask me, where's this money going to come from? How is this money going to find its way into Bitcoin? Well, the answer is simple. It does not take $1 trillion of inflow to increase the market cap by $1 trillion. It just doesn't, because there's only 2 million coins that are held by exchanges available for trade. So it takes significantly less than $1 trillion to move the market cap up by $1 trillion. Remember, the price has to move to liquidity. As the demand flows in, price appreciation needs to occur in order to incentivize these long-term holders that hold the vast majority of the supply to decide to let some of that go. It's also worth keeping in mind, most of these holders are borderline psychopathic. They have held from sub 10k Bitcoin up to 69k Bitcoin, all the way back down to 15.5k Bitcoin, and now back up again to 30k, and they haven't even flinched. Okay, these people are not letting go of their Bitcoin in the 5-figure neighborhood. They are waiting for 6-figure Bitcoin. Likely many of them are waiting for 7 or 8-figure Bitcoin. The supply is simply not there, and so long as demand does not dwindle, we will continue to see price appreciation, as the only 2 million coins that are available for trade will be competed for by everyone that is looking to acquire more Bitcoin. Got a nice chart here from Willy Woo, Bitcoin cost basis density map. Now, it might not show up because it's quite faint, but there's a high density pocket here. And what that does is it shows a validation point. Now, a validation point is the point at which holders, Bitcoiners, are confident and comfortable at taking Bitcoin off exchanges, withdrawing it to cold storage, and becoming one of these long-term holders. So under here, there's a dense pocket, which suggests that this will be very difficult support to break. Could we see a pullback down to around 25k? Yes, but in theory, it's going to take a lot of work to get through this pocket of support between, say, 25k and 30k. In black here, we've got the Bitcoin price, and in orange, we've got the supply last active 2 to 3 years ago. What you can see is typically when the orange line here makes a bottom and curls up, that coincides with the end of the bear market. And then when this orange line makes a top and rolls over, we get a massive bull run. Then it's a rinse and repeat from there, okay? We make a bottom and curl up, that marks the end of the bear market. We make a top and roll over, that marks the final portion of the rally. And where are we today? Well, today we are right in this topping neighborhood. We are starting to roll over. Now, these things can take some time before they truly start to break down, but this is a time to be expecting further upside from Bitcoin, not further downside like in this neighborhood here or here or here. Consensus in the market still remains that the 4-year cycle is dominated by the halvings. So far, those people are not wrong. As you can see in the pink here, this is the current cycle. We are right in the middle of the prior cycles, perfectly on track at this current moment in time. So if the 4-year cycle is going to repeat as it always has done, we could expect something like this into the halving and then a big parabolic advance for the price of Bitcoin. Of course, I'm still in the camp of people that believes we're more likely to see a rapid appreciation into the halving and then a decline thereafter. Now, as I've been saying over and over again, this thesis of mine is currently being tested. It's currently being heavily challenged by the price action. And as I've said all along, not only am I open to scratching this one off and saying this is not going to happen, not only am I open to reverting back to trading a 4-year cycle standard shape, but I actually would prefer to be wrong on this hypothesis. And the reason I say that is because, one, this is way easier to trade because we've seen 2 or 3 of them before, right? And also, the longer the bull market goes on for, the higher the top we can expect for the price of Bitcoin. So I would rather be wrong about this thesis of a left translated cycle that blows off and then rolls over. I would much rather be wrong about that because we will get a lower top, and from there we will spend, if I'm right about this, around 3 years in a bear market decline, not something that I really want to see. So at the moment, it could really go either way. As you can tell, we could either do this or there's nothing to say we're not going to do something like this. That's to be determined. This is still my primary expectation, although, as I've been saying, I am getting ready to abandon this, scratch this one off and say we're probably going to go back to a 4-year cycle. The price is the price is the truth, and I certainly don't want to be making my own version of the truth. I'm going to let the price speak for me, and then I'm going to observe the truth with an unbiased, unemotional perspective and continue to trade what is in front of me. You can see from Bitcoin down here in the red, this is the current cycle, right? Even if we make just 50% of the 2019 peak, that implies a price of $140,000 Bitcoin in just 27 months. So that would look something approximately like this, right? This would look something like this. And then once we got here, we would be at around 140K just 27 months forward. Is that possible? I would think so. Is this relatively conservative? Yes. But the thing I want to point out the most is, notice here, this is the value of $100 invested. So a couple $100 invested here could well be worth multiple thousands by the time we get up into this neighborhood. So in 27 months, there's massive opportunity here to turn smaller amounts of money into larger ones by simply buying and holding Bitcoin. So all good news on the Bitcoin front. Everything seems to look okay. We're going to run into the charts. The closes from the week are telling me a bunch of things, so I'm going to share with you what I'm being told by the market. For now, let's start with the dollar as we always do. Here's the Dixie, the dollar index. And as you can see, counter trend bounce. Now, this makes perfect sense. In fact, let's invert this chart, okay? What do you see? Resistance, 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 breakout, retest, probably looking for resumption, right? Nothing to be concerned about in my opinion. Let's flip this chart back up the right way. So was it reasonable to expect this? No, I don't think so. So a perfectly reasonable retest, as long as we can roll over from here or somewhere in this neighborhood, then I think we can say happy days and we can continue to target the mid-90s for the dollar index. Invalidation for this would be if we work our way up to this top blue line and then break out. Something like this occurring would of course invalidate this whole move. But for now, I continue to think that what's coming over the next couple of sessions is a rollover. Here's gold. There's not much to say about gold apart from long and strong continue to push. Now, if we measure the days from the last cycle low out to where the next one is marked, it's about 22 days average. So could we expect some downside, maybe a backtest of this red horizontal level before moving higher? Yes, I think that would be a perfectly normal and healthy cycle to see something like this and then go again into the next cycle. But I do believe that this market has broken out and will push higher. Something I've been meaning to say for a long time, but I just keep forgetting to say when it comes to gold, is as we approach the end of this hiking cycle, gold thrives in a rate cutting environment. As the rates come down, gold, which is a non-yielding asset, starts to look more attractive. So as we approach the end of this rate hiking cycle, as the market can start to front run future cuts, I expect gold to do very well off the back of this. And therefore, I really do believe this is probably the time that we have started the true bull market for gold. I think we had this initial move up to highs, we've had the correction, and now we're working our way slowly up to this all-time high level again, where we'll probably consolidate, and then I think we break out. Once we break out, 3K gold, 2,800, something like that, seems pretty reasonable for my first target and for the level in which we will first get our proper correction for gold. The market moves slow. Gold is not a fast moving market, but I do believe that we've got a very, very good chance here of seeing gold put in a run to 3K and finally break this all-time high level. It's a similar story for silver. We've got the breakout. Again, if gold is going to pull back into its daily cycle low, then of course silver's probably going to have a pullback as well. But then I think we can go again. I think we could probably break out of this massive downward sloping red resistance line that goes all the way back to the $50 peak back here. And once we're out of that, I really do believe that $30 comes quickly thereafter. Then it will be a case of, can gold break its all-time high? And if it can, which I think it will, then that opens up the $50 target for silver. So as ever, one day at a time, see what the market can give. But so far, I'm as bullish on the precious metals as I've been since about $800 gold. Here's the S&P 500. So I'm afraid it's going to be a little bit boring for me in terms of the stock market over the next coming days and weeks. Now we're right in the neighborhood. We're approaching, what's this, day 18. So a half cycle low at around day 20, perfectly reasonable to expect. But the question is, do we just come down, make a day 20 half cycle low, rally up once more, and then drop into that daily cycle low and that weekly cycle low? That would be unusual for a weekly cycle low. Weekly cycle highs will usually top earlier than, say, day 30, day 35, like a regular daily cycle would. Once we get into that weekly cycle low, which remember is comprised of between 4 and 6 daily cycles on the upside, we would expect the final daily cycle to top slightly earlier and spend a little bit longer in a declining period. So is this what's coming? That's to be determined. For now, the stop's been choked up, as you can see. Long and strong continue to push, but lose this upward sloping blue support line right here, and I will be cutting this trade, walking away with that profit, and sitting patiently on the sides, waiting for the daily and weekly cycle low to form. So like I said, it's probably going to be a bit boring for me in terms of the stock market. I'm going to be repeating myself all the way into that daily cycle low because this cycle is stretched, right? I've been showing this over and over again. And do I want to be chasing a market? I mean, I already have my positions, but do I want to be trying to get cute here? Not really. I think we know the cycle's due. We'll wait for the price action to show us that we're coming into that daily cycle decline. And then this is the opportunity for me to go back to full exposure. I think pretty much anything can be bought out of here and it's going to do well for a minimum of 4 to 6 weeks. And in the best case scenario, it's going to do very well for a lot longer than 4 to 6 weeks. So for me, this is where my focus is going to continue to be where my focus is all the way into the end of August. NASDAQ, it's a similar story. As I keep saying, close below the blue horizontal here on a daily candle, and I'll probably just cut this trade and sit on the sides and wait for that daily cycle low to come. I want to make sure I've got as much capital protected, as much profit locked in. It's been a really good year. I just want to make sure I'm not giving that back. It's okay to sit out of the market for a couple of weeks. Even in the worst case scenario, if say I sold here and the market rallies to all-time highs, well, I caught the vast majority of it, right, the whole way up. So if I miss out on the final portion, that's fine. Then we get that weekly cycle low flush and we'll go again. It's not about capturing the entire move. It's about capturing as much of it as possible whilst protecting downside risk. So I'm more than happy to duck out of this trade early if we close below this blue horizontal. And like I said, my focus is on getting to that weekly and daily cycle low due in around 20 sessions time. Different story for the Dow. Here's the Dow Jones. As you can see, we've broken out, so we'll keep pushing this trade and we'll see what the market can give. I don't have much to say about the VIX. The VIX is probably going to trade in a little range and then break down as the stock market makes its all-time highs. Once we eventually get down to the very low numbers and the market is at all-time highs in the equities, that's where I'll be looking to add VIX exposure. But as I keep saying, probably not a great deal going to happen for me in the VIX over the coming weeks and months. Apple right into support, so maybe time to close this trade. We'll see what happens over the coming sessions. All the while we're above the blue and yellow, I will continue to push this long. Here's Tesla. As you know, we were out of this trade, sat on the sidelines, and so far that seems like the right decision. So break out the downward sloping purple resistance line, we'll add the long back, but for now, not really interested in that. XRP, still kind of consolidating. This kind of makes sense, doesn't it, after such a big pump? So this could go on for a lot longer or not very long. It could break up or down. I don't really know. It's difficult to chart things that just pop straight up. So my strategy is always to give it some space and see what the market can give. Ethereum's price action, trading much cleaner, still making higher highs and higher lows. So long as we can continue this, we can expect further upside from Ethereum. Bitcoin, here's Bitcoin. Look, down in the bottom of the range, but hasn't lost this level yet, has it? Still in a well-defined range. We could certainly see upside in a breakout. If we do, we'll add the long. We're also open to seeing some kind of rollover into that daily cycle low before we can go again. And if that's the case, we'll look to buy a swing. The crypto-related equities, as I keep saying, I'm still in this camp of people that thinks dips are for buying. So I'm not trying to jump out here, get cute, because if Bitcoin was to turn around on tomorrow or Monday and break out at the top of this range, then all of these are just going to rocket straight higher, aren't they? So I don't want to try and get cute with this. Or I'd rather play patient, try to continue to build my positions as I go. Same deal with MicroStrategy. Already got 2 positions here. So it looks like we could probably draw a trend line. It looks like we've got a well-defined or something that's about to be well-defined setting up. So we'll see what can happen here. If we can maybe compress for a bit more and then break out, or potentially even get all the way to the daily cycle low for Bitcoin and then break out. That's a high probability setup. Stops can be moved up again and we can add another position. And of course, the same is true of Riot. We got this sort of setup coming on. So if we can get down here into that daily cycle time frame, or if Bitcoin can break out, then I think we can look at adding positions. And it's the same deal for Marathon as well. So I don't like the look of this trend line. It's a bit steep. Hopefully we can get a better one than that, but we'll see how it goes. Overall, I think the message is simple. There's a time to be aggressive, okay? And there's a time to recognize where we are in the cycles, to recognize things are a bit overheated, and that consolidation is a perfectly natural part of uptrends. Things don't move up in a straight line. They move up and they consolidate. They move up and they pull back a bit. They move up and they pull back a bit. And the thing to do is to not get emotional, not worry about it, not spend ages looking at your open P&L go up and down. None of that matters, okay? What matters is the charts. What matters is the truth. What matters is having a reason to exit the trade rather than a gut instinct. So far, still pretty long, still pretty strong. Getting a bit more nervous. Nervous is not really the word, but as you know, getting a bit more defensive in my posturing as we start to get towards the top of this daily cycle, because this weekly cycle flush is usually the steepest decline. Now, again, I'm not calling for anything massive. I'm not calling for this, but we could certainly see something like this down here, and that would still be maintaining the red upper sloping support line. That would still be a perfectly bullish structure. And like I keep saying, this would be a very good entry to buy a swing, put a stop below here, and then target the new all-time highs, something like this, before we can probably see a bust. But as ever, one day at a time. So I hope you enjoyed that. I hope you found value there. I hope you have a great weekend. And in the meantime, I'm your boy Camel. Take care from me. All the best. Cheers. Bye.